Hey guys, welcome back to another episode. Today, what I want to do is take a closer look at the three popular semiconductor companies, Nvidia, AMD, and Intel. We've recently seen a bit of a pullback in all stocks, and I just want to share why I believe one stock is a buy over another, right? So I want to take a closer look at all the bullish points and bearish points for these three semiconductor giants. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so actually, let's start backwards. I was going to start with Nvidia, but I think I'm going to start off with Intel. Intel right now is sitting at $36.29 as I am recording. I'm pretty sure by the time this video comes out, maybe the market is volatile, right? It could be a little bit higher, it could be a little bit lower. But year to date, the stock is down roughly 24%. This is going to be the only one out of the three that we are seeing is kind of in the red. All the other ones are still seeing some great returns. So Intel right now, market cap of $155 billion pretty much, with a dividend yield of roughly 1.3%. In all honesty, I wish the dividend yield would eventually leave, as this company is focusing a lot right now in growth and manufacturing, and I would rather have that money be used elsewhere. So next, I want to take a closer look at some valuations. First, we can start off with Intel, right? So Intel, if you look at their PE ratio currently, is at 92. And some of you might be saying, hey, Jose, you might be crazy taking a closer look at Intel with the valuation that high. But if you are a semiconductor investor, you do know that the past 12 months has been a very volatile space due to over inventory correction and has really caused some fluctuation in PE ratio right now. That's why I believe it's better to look at forward, which is the end of this fiscal year, so about 3 quarters from now, and forward 1 year, which is the next fiscal year, so about 2 years from now. And PE ratio for this end is going to be roughly 26.67, which is not that crazy. Now, PE ratio for 1 year is roughly 15.73. This stock keeps getting cheaper and cheaper. Now, obviously, if we take a closer look at, there's a lot of kind of negative things in their balance sheet that maybe some investors might not like. Right now, the company is investing a lot of money in their manufacturing, endeavors, and that's causing free cash flow this past quarter to be negative $2 billion. And almost for the past year or so, we can see that free cash flow has been negative. The company also has a huge amount of long-term debt of roughly $49 billion, but they do have roughly $25 billion of cash and short-term investments. So Intel is not a company that's going to go under anytime soon, and we're getting a lot of incentives from governments to kind of give more money to Intel to really focus on this manufacturing push. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Now, we kind of looked at their financials and valuations. Let's take a closer look at why one would want to invest in Intel. What are the good things of Intel? First, they have the AI accelerator potential. They have the Gaudi 3, which can definitely get some crumbs in the AI market, and just some crumbs can help revenue grow. The foundry market has potential, right? They're getting customers in their advanced nodes. Now we're going to have to see how they continue to progress. We're seeing them create CPUs for the data centers and for their client markets on these new nodes like Intel 4, Intel 3. So we're seeing the potential there in the foundry side. They're also getting numerous amounts of money and grants from governments all around the world to subsidize this foundry push. The market believes it won't succeed, and I do want to say that's why Intel stock continues to get beat, as right now many people don't believe Intel will turn around. AI CPU inference is also a thing. Intel has really pushed on kind of bringing their CPU as an AI chip one way or another. So that's also another good thing for them. The final thing is the company is focusing on technology for their server CPU and research and development there. So overall, there's definitely a nice amount of reasons to be bullish on Intel. Now I want to talk about what are some of the reasons to be bearish on this stock. First, let's start off with the most visual one that we saw earlier on: heavy debt and negative free cash flow right now, right? So that's definitely something to keep in mind out if you're worried about it. But remember, I mentioned based on the kind of cash and short-term investments, based on the products and revenue this company company makes, I don't see this company going under anytime soon. We're also seeing competition in the server side. AMD has their server theirs, but we're also seeing big tech players create their own CPUs, which is bringing a lot more competition into the server CPU market. The foundry business is still expected to see peak loss in 2024, so we should expect probably even more free cash flow negative this year. And next, we're also expecting to see if this is really going to be a competition to TSMC, right? Is TSMC just going to kind of steamroll through Intel's products? That's something to kind of keep in mind out. And the final thing is, not only are they seeing heavy competition in server CPU, there's also heavy competition in client and business CPUs, which are like your consumer CPUs from Qualcomm, AMD, Apple, as we are starting this AI PC race. So those are the bullish and bearish reasons for Intel. Now let's take a closer look at my second favorite semiconductor stock, AMD. So AMD right now is sitting at $162. From its 52-week peak, the stock has definitely fallen a nice amount. It's down roughly 23%. So if we take a closer look at PE ratio for AMD, we can see again, currently numbers look inflated, but that's how it normally is. PE ratio for 1 year is 45.55. A little expensive in my taste for the next 12 months, but forward 1 year, it has dropped down to roughly 30.16. So we're getting it in those very, very low 30s. If you refresh, depending on the type of the day of where AMD stock, you might even get them in the high 20s, right? So valuations have come down a nice amount. And if we take a closer look at their balance sheet is nowhere near horrible like we saw Intel. We can see this company has $5.7 billion in cash and short-term investments, roughly $2.4 billion in debt. So they have plenty of cash to cover that. And they are positive in free cash flow, even though it's very small. Remember, we definitely had a wild year for AMD and the overall PC inventory market. Now, there are a lot of good things for AMD, in my opinion. First, they have various segments. They have the AI accelerator market, they have the CPU market, they have the embedded market, they have the consumer market, the gaming market, the GPUs. And right now, for AMD, not one market holds the crown where it really drives all the revenue. So, if any of these markets does well for AMD, it can definitely boost revenue. So, they're very kind of well diversified in different semiconductor products. The second big good thing for AMD is obviously the potential of the MI300X. I'll probably be doing more of an update on AMD in the upcoming hour, so make sure to stay tuned. They're also seeing the enterprise market be a huge potential for CPUs, so that's also great. They're gaining market share from Intel in both servers and clients, a strong balance sheet. And I want to say their valuation, well, it's a little bit high, right? If we take a closer look at forward 1 year, it was about low 30s, high 20s. I don't believe their valuation is solely dependent on AI. Again, their segments are very diversified, so their valuation can kind of build up through all those other markets doing good. Now the bad. Very similar to Intel, the CPU market for both server side and client side is getting massive, massive competition. The other bad is the MI300 is a slow process, and we have to see who really adopts the MI300X. We've heard of a few cloud server providers, not all of them have adopted it. So obviously, there's still ways that, hey, look, the MI300X might not be as fast as many anticipated in forms of ramping up. This is also using a very special advanced packaging technique that TSMC doesn't have enough capacity for. So this is going to be a slow process in just adoption from players, but also a slow process in manufacturing time. So that's definitely the bad. But like I mentioned, I believe their valuation is not solely dependent on AI. Now, the final company we're going to take a closer look at is Nvidia. Right now, sitting at 868. From its 52-week high, the stock is down roughly 8.7%, almost 9%, right? So if we take a closer look, Nvidia's PE ratio forward is 35. The cheapest out of all of them, I believe, forward 1 year is 28.74. So this is a bit cheaper than AMD right now. If we take a closer look with the huge boom in AI market, this company's cash and short-term investments has jumped dramatically to $26 billion. And that gets me really excited, right? Because now they have cash that they never had before, and they're going to be able to make some crazy, crazy moves with that. Company's free cash flow is also roughly 11 billion this most recent quarter. In theory, this company can pay off its total long-term debt with 1 quarter of free cash flow. So that overall shows you how much the AI boom is really helping Nvidia. Now, there's a lot of good for Nvidia, and I believe there's only one bad thing for this company. So right now, Nvidia, the good. This is a full AI platform. They're not just a chip company. They provide chips, network, software, infrastructure, GPUs, CPUs, networking, DPUs. The list goes on and on. So they are a full AI platform. They hold majority of the market share here. There's no denying it. That competition is nowhere near to be found in forms of performance, in forms of manufacturing capacity with the partnerships with TSMC. Also, the accelerated market is expected to be supply constrained in 2024, which bodes well for Nvidia's margins and revenue window of how far they can see. Finally, we did see that free cash flow and regular cash is just building up, and I wouldn't pass Nvidia to use that cash to continue to invest in research and development or make investments and acquisitions in some pretty cool small companies in general. Now, I mentioned there was only one bad thing I see for Nvidia, and I am honest to this that the only bad thing I see for Nvidia is valuation pretty much depends on the future of the AI market. So I personally, and I could be wrong, believe that the AI market is strong, and we're going to see this trend continue to grow on as AI is going to change every aspect of every different technology. But I would say it is never impossible for the market to humble us, and sometimes the market humbles us at the right at times we never expect it. And it's not impossible for there to be a scenario where AI demand drops. And if AI demand drops, that's where this company is making all of its revenue. That's where its valuation is really at. So if you believe, and I'm not saying that I believe the AI market is going to see that. Obviously, there's pocket of weaknesses in the AI space, but I just want to say that its valuation right now is completely dependent in the AI space and its projections on AI chip revenue. So if there's ever the instance that the AI market slows down, like I mentioned, we've seen positive trends from capital expenditure, from big service providers, from the way technology is evolving that shows there's that positive trend. But if there's ever a bleep in that trend, then we can definitely see a really crazy correction. So Nvidia is still a dominant king here. And again, these are all the bullish and bearish points that I have for all three companies. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.